Not yet. Here we go. Good evening, everyone. Happy Tuesday. My name is Noor Al-Masri. I help multi-six-figure entrepreneurs stop overpaying in taxes and keep more of their hard-earned money in their pocket so they can build their empire. Are you that person? So if you are not that person, maybe you will be. So we'll see if this information is going to benefit you. Maybe you aspire to be a multi six-figure entrepreneur. So bottom line, I'm going to help you save in taxes. I don't know, Instagram, can you hear me? I forgot to test that. But let me know if you are watching. Well, you cannot hear me. If you cannot hear me, I don't know how you can hear me. I mean, you can do what I'm saying. So I'm just going to try. All right. So, guys, we're in the middle of tax season. We're going to talk about S corp. Before we get into the mistakes that S corp owner or founder that they do that can cost them a lot of money, I'm going to explain first what is an S corp. S corp is an election. So when you go register a business, usually you might go to an accountant who can advise you what should you structure your business as, or you can go ahead and file it on your own through the department or state department, or not state department, sorry, through your state website, or you might be using one of those services online where you can check what you want and they will give you what you want. And this is the worst way to do it because you don't know what to check. And a lot of them, they have the option of what? S corp election from day one. So this is the first mistake that S corp owner do. They decide to be an S corp right away. So let's talk about, again, what's S corp? On a state level, any state level, there's only LLC, nonprofit, corporation. These are the three types. Most of the state, they have only this type of businesses. Now, maybe partnership, like some states, they have it standalone. Some states, they don't. But let's say you have, okay, so you can register as any type of business, but then there is no S corporation. You cannot find the S corporation option except if you are registering using the services provided online. Because the only reason they have it there, because they want to know if you want to elect to be an S corp or not. So S corp is an election. So you could be registered as LLC, single member or multi-member, or a C corporation. And then you can tell the IRS technically, you make this election, you tell the IRS, hey IRS, tax me as an S corp, as different type of taxation. So why do people elect to be an S corp if they're aware what S corp can do for them? Typically to save in taxes. Not everyone can be an S corp because there's a lot of rules to an S corp. So if you have a foreign partner that is not a U.S. taxpayer, you cannot be elect to be an S corp. You're not eligible. If you have more than 100 shareholder, you cannot be an S corp. So this is just two of the rules that you might consider when you be an S corp. So this is what an S corp is. You can always elect or diselect, but if you withdraw from being an S corp, it's going to take you a little long time to be an S corp again. Like you cannot be, I think, don't hold me on this, like don't quote me on this, like maybe 5 years, if I remember correctly. I have to refresh that information. I think it's 5 years. You cannot elect to be an S corp again. So people typically do it because they want to save in taxes, but often they don't, because you have to make a certain amount in net income in order to really save in taxes. But also, we want to look into your personal information. Are you married, not married? Your spouse is working, how much they're making? Do you have another job? Do you have another business? So many elements get involved in just that decision. So typically, what I do for my clients, I do tax analysis to see which one is the best for them. So that's how we do it. I cannot give anyone a fast answer saying, hey, this is how you should do it. It's not that simple. So you want to make sure you have the tax analysis done on the whole picture. You cannot just like decide without any information. So this is the first mistake, to go ahead and register as a S Corp right away. The other mistake is they don't pay themselves as a shareholder the right way. So what do I mean with that? If you are sole proprietor sole proprietor, the other thing is LLC or multi-member LLC. Simply, how do you pay yourself? You withdraw money from your business tax account, or you write yourself a check, or you do a transfer from your business account to your personal account. And then when you do your taxes, you do payroll, self-employment taxes when you do your taxes, and you put that estimated quarterly payments. So this is how you pay your taxes. Now, when you are an S Corp, people who are advertising for you have to be an S Corp, advertise for, hey, you're going to save on this self-employment taxes. Well, yeah, because you're paying payroll taxes now. How? You cannot pay yourself as an S Corp on a withdrawal. You cannot just give dividends, like we call it now dividends. There's different names, but technically you cannot withdraw money from your account or business account unless you are getting a reasonable salary. What is a reasonable salary? That means if you go to work for an employer or a company, whatever. So I want to make sure like everyone understand what I'm saying. So if you work with someone else at their company and they pay you salary, this is what you accept. This is how much you accept. For example, if they have to pay you $40,000, that's the market value. This is how much you deserve, or this is how much that you value for them. So like this is the market value for your position, for my experience, and based on the company size as well, this is how much you should be getting paid. This is how much you should pay yourself. Reasonable salary. Now, should you pay yourself a salary? Yes, if you want to take money from your company, you have to. Now, if you don't want to pay yourself from your company, then maybe you have some other type of income. Then you shouldn't. You shouldn't. You can not be on a salary, but what you have to do, you cannot take a penny from your company unless you are on a salary. So you have to take a reasonable salary in order to get paid or to take withdrawal from your, or distribution, we call it distribution, from your S Corp. Why is that? Because now IRS did not have you pay self-employment taxes, but they still need your money, because when you are working with someone else, they get the withholding and they pay the state and the IRS. While when you have a business, no one else is doing that. You have to be on a payroll, so you are employed with your organization, with your company, and you're withholding taxes, and you file those taxes and pay them in a quarterly basis based on your business. So that's why you cannot not be on a payroll when you are an S corp. So this is another thing. So now the first mistake is to right away elect to be an S corp. The second mistake, not having yourself on a salary. That's very important. Now, the third one, and this is a very common mistake, not filing taxes every year. Yes, a lot of people don't file taxes every year. And when you are a business, you must file taxes every year. Why? Because IRS is looking for those informational tax returns to come through every single year in order not to send you a penalty. So I know a lot of business owners do not file unless they have income or have activities, but they must file their taxes regardless they have activities or not have activities. It's an informational return. You do not pay taxes on the entity level. Now, sometimes in some states, you might pay some taxes. Like Illinois, you have to pay 15% from to the state on the entity level from your net income, not from your revenue. You have to differentiate between revenue and net income. Revenue meaning like how much you get in sales. Net income meaning like your income, your sales minus your expenses and depreciation and everything you can deduct. So that's the difference. That's technically the difference between not the difference, sorry. I was reading the question. Badriya, I will answer your question in a little bit. That's technically the three mistakes. Let me repeat really quick. They elect to be an S corp very early. They do not pay themselves salaries, but yet they get a distribution. What's the mistake of that? Like, you could get penalty actually and get audited from the IRS if you do that. And the last one is not filing every year. So I see, Badriya, that your question saying, hi, Noura, can you please compare briefly between LLC and S Corp? Definitely. I do have a video on my YouTube, Noura's Books, YouTube, comparing between LLC and S Corp, but I will mention it here very quickly. So LLC, technically, let's say you want to start a business. That's the easiest access. This is the easiest way. LLC, there is no LLC on the IRS level. So on a federal level, if you go to the IRS website, there's nothing such as a limited liability company. It's not there, LLC. They only have corporations. So it's not acknowledged from the IRS level. That's why you hear the term disregarded entity. So LLC is disregarded entity. It's only recognized on the state level. That means you registered on the state level, and then you file taxes at the end of the year within your tax return. How? Like, you don't have separate taxes. While on the S Corp, you now file two different tax returns. One for your business, for your S Corp, and the other one is for your personal return. Technically, your business return, S Corp return, tax return, give you as an owner a K1. That's your W-2 as an owner, in addition to the W-2 that you will get from your S Corp, because remember, you are an employee for your company. So you would get two things. You would get W-2 and K1, and then you file your tax return. That's why S Corp return due on March 15, because they want to give you enough time to file your personal return by April 15. So you have to file two separate returns with an S Corp. Now, with an LLC, you file within your personal return. your personal return due on April 15, and that gets into a Schedule C. If you heard this term, Schedule C is where you report your income and expenses for your LLC. Now, this is only if you are a single member LLC, you have no one else with you. Now, LLC is no different than you doing a freelance work. So how would you do a freelance work? Like you're getting maybe a 1099 job, or maybe you're just doing a Canva or whatever, like design, like any freelance work without registering any business, or in some states like California, registering a sole proprietor. That would be also filing your business return. Not you don't have a business return to file. You file everything within Schedule C, just like an LLC. So what's the purpose of the LLC? Is just like the protection from legal protection, technically. But we can talk about this in a later video and later time, because if you do not do the proper compliance, you might even lose that protection, and a lot of people lose that protection. So like I said, LLC are not recognized on the IRS level. Now, you could be an LLC and then elect to be taxed as an S Corp. Now you become recognized with the IRS. Now you are required to file another return, and you are required to take a salary in order to take any distribution from your company. Now, I want you to differentiate one thing. Like for multi-member LLC, also, even though it's multi-member LLC, you have to file a separate return. That is totally different return than being on personal return. It's going to be like partnership return for your multi-member LLC. So these are like some differences. So let me know if you have any question. I would love to answer for you next time. I'm not going to promise a time that I'm going to come live, because I've promised a couple of times, but it's been crazy, like, tax season. I don't want to promise you a specific time. So if you are on YouTube, make sure you have that bell button, subscribe to my YouTube so you can get notification. Follow me here on Facebook or LinkedIn, whatever platform you are watching from. Of course, you're welcome. And make sure you can comment and ask your questions. I'll be happy to come again and answer your questions. And I know what to make next that can be of your interest. All right. That was Noor Al-Masri. Again, I help entrepreneur or multi-six-figure entrepreneurs stop overpaying in taxes and keep more of their hard-earning money so they can build their empire. I'll talk to you later. Bye.